Hey guys, welcome back to Finance Friday. So it seems the number one topic for discussion right now is flour prices. Now, this topic is very, very controversial and people are be very passionate. And many people have blamed some of the supermarkets for the cause in the increase in flour. Some have blamed distributors. But today we're going to touch on the real reason why flour and other food prices have been increasing. And more importantly, how you as an investor can profit from this scenario. All right, so it's no secret that food prices have been increasing, and in particular, flour prices have increased quite substantially over the past year and a half or so. All right, now a number of reasons have been forwarded for this um, increase in food price, and supermarkets have been blamed, and the Supermarket Association has been back and forth with the Minister of Trade on this topic. But I'm not going to delve into the specifics of what was said and some of the responses. But I'm going to delve in a little bit on the real reason I think food prices have been increasing. And in this article, you see that um, the Ukraine has almost, well, by now they've finished their planting of spring wheat, which will be harvested later on in September, October, around there. But we've seen that the Ukraine has planted about 25% less wheat than they did in previous years, and that is bound to have a huge effect on the price of wheat going forward. Not to mention the fact that Russia has been accused of essentially blockading some of the Ukrainian wheat, which redoubles on the logistics challenges that we've been having and the fuel price increasing globally to result in what we have today of wheat prices increasing sometimes between 30 and 50%, depending on where you are in the world. So the real reason that wheat prices have been increasing is very external to Trinidad and Tobago. It's not a domestic issue at all, at all. So let's get that clear. But going forward, while this may be a challenging environment for many of us, there is a way for you as an everyday investor to profit during this troublesome period. So we're going to take a look at an ETF called WEAT, WEAT, which is an ETF or exchange traded fund that holds wheat future contracts. So the idea is that if you suspect the price of wheat to increase in the future, usually invest in this ETF called WEAT wheat, and you likely to get pretty good returns. Let me take a look at what the chart has been looking like over the past year. Right. So taking a look at the daily chart for the ETF wheat here, we see that the price of the wheat ETF has moved from about $6.44 a year ago. It reached a peak, a high of what is this, about 11, just over $11 in March, and it has dropped down quite a bit now to $9.63. Um, but it's still quite elevated compared to the prices a year ago. Now, taking a look at this chart, you can see that it is close, is just past its 100-day moving average. Now, the green chart here represents the 200-day moving average for wheat. The yellow chart, the yellow line, sorry, represents the 100-day moving average, and the red represents the 50-day moving average. So we see that wheat has broken through its 50-day moving average and has also passed the 100-day moving average, and is in danger of hitting the 200-day moving average if it continues on that trend. Now that bodes well for persons who might be interested in in keeping wheat prices low and is actually a good thing for consumers. From an investment standpoint, when I look at this chart, I see a lot of opportunity because there's so much volatility in the price of wheat. There is the opportunity for you to trade the stock. I won't really hold this for the long term. This is more of a trading scenario. I freely admit I'm not the greatest trader in the world. I'm more of the buy and hold long term style investing. But even I have been able to profit here and there, 5%, 6%, 8% on certain trades with the wheat ETF. So at a time like this, where the wheat price has been dropping precipitously, um, I would start nibbling into a position with the understanding that the price may get back to somewhere near its 100-day or even its 50-day moving average, which is between $10 and $11. So this is a simple way for you to benefit from the increase or the volatility in the price of wheat without putting, I guess, much funds at risk. So I highly recommend that you leave investing in individual futures to people who are more seasoned. But if you're just starting out, like most of my listeners are, then an ETF which covers the futures for a couple months or contracts for a couple months, like this wheat ETF, might be a good way for you to play this increase in the price of wheat and the volatility in the price of wheat. All right, guys. So be sure to like and subscribe to our page, and we look forward to hearing more from all of you on your investment journey. And have a great weekend. Ciao.